Hello everyone, and wouldn't it be nice if we didn't have to talk about Ukraine and Russia anymore, that had all been resolved, but unfortunately it isn't the case, and Russian troops, as I said yesterday, boots on ground in Ukraine and continue to push forward towards the proper Ukrainian military front lines, and who knows how far they will indeed push. Certainly a big swathe of Ukraine is at risk immediately as we go to air today. That is going to continue to keep downward pressure on equity markets. The situation really is that the Lavrov, the Foreign Minister of Russia, the Secretary of State of the US have cancelled their meeting. It looks like President Macron was the only one who was sure that the meeting was going to go ahead between Biden and Putin, because neither other side of those parties confirmed that meeting, which gave the market a little bit of a bounce on Friday. But yesterday what we saw was a little bit of a bounce in equities in the US, and that was due to there being some belief that what Russia had already done in Ukraine in taking those separatist regions, declaring them independent, taking them, was all Russia was going to do, fingers crossed, and there was that little bit of a hope rally on that. And then when Biden announced sanctions on Russia, everyone for a moment wanted to believe, oh, that means they'll stop where they are. But of course, neither of those things are correct appraisals of the current situation, and we're likely to see an intensifying conflict, not an easing off conflict in coming days. We've even had Australia's Prime Minister today perhaps being privy to US intelligence, who knows, suggesting that Russia will be making rather more bold moves in the next 24 hours. That remains to be seen, but certainly it would tend to make sense as the US is moving fresh numbers of F-35s, their very best fighter jet, to the NATO border, I think with Poland in that area there, and that whole stretch of Russia-NATO border with other countries is now going to be on a heightened military alert status. And before more troops and more weaponry is shifted in their direction, it makes sense militarily, unfortunately, for the Russians to go sooner rather than later. Now, moving along to the other side of the world, to the land of the long white cloud, which many of you will know is the correct name for New Zealand. So in the land of the long white cloud, very pretty place, nice to see. And today, despite their economy being in all sorts of trouble, and it really is, the Reserve Bank of New Zealand today raised interest rates for not the first or second time, but the third time. That's how slow the Australian Reserve Bank is. It just goes to highlight. I mean, the Australian economy is doing so much better than New Zealand's at the moment, and we're still sitting on our hands here with the central bank asleep at the wheel. The rest of the world's already moving on. The Fed's slow as well. The Reserve Bank's trying to prove it's very keen. We've got to give it to the Reserve Bank. They are very keen to prove that they can be the slowest central bank in the world, and they're not going to let the Federal Reserve get that title ahead of them. So they're waiting for the Federal Reserve to move, and then they will move, because of course all they ever do is follow the Federal Reserve, which makes no sense at all given that we're entirely different economies in different regions of the world. Nevertheless, that's the RBA's goal and objective. I think they will achieve it. But in New Zealand, interest rates now at 1%, which is around pre-COVID levels, and are likely to go higher. This is giving a little bit of a support to the New Zealand dollar, of course, but the New Zealand economy has a lot of significant challenges. So even though a better yield is maybe attractive in the short term to a spot currency trader for the New Zealand dollar, it may not last too long, any New Zealand dollar strength on this basis. Moving along now to markets. Let's look at the US 500 index. It really is a case of, I spoke of waterfalls yesterday, that was very colourful, wasn't it? But was kind of sitting heavily near these lows, a little bit of a rally, as I said, going into New York yesterday, sitting heavily on those lows. I think, as I highlighted yesterday, any slip to a new low beyond yesterday's low again now is really catastrophic price action. It's the kind of price action that breaks the back of a market. So do keep an eye on that, because we're certainly not going to see any good news out of Ukraine. And if you happen to see a headline that sounds like it could be good news about Russia and Ukraine, it's probably not accurate. That's how dire the situation is there. The Australian stock market today It's consolidating at higher levels than the US market, not sitting on that previous low, but nevertheless, it does look tired. It does look ready to break down out of this recent formation, trying to hang on the grim sort of hope that somehow being a commodity exporting nation, we benefit from a war. I don't think so, because the war's not going to be a world war, so it's not going to really encourage a lot more production of weaponry or roads or railways or anything, because all of that is already in place for this conflict. So I think you just have to be a little bit careful on any attempted rallies in the Australian stock market at the moment. It is vulnerable to breaking lower in a free fall fashion. Speaking of Australia, the Australian dollar really pushing to the upside on this idea that Australia is some kind of safe haven, and that commodities will be in demand, and certainly commodity prices are up in recent days. But again, I think we're going to start to run into resistance here, and the Australian dollar could be a little tiring a little bit. I wouldn't want to go long just here, but I have been wrong before. Look at that, I'm a poet. But I do think the Australian dollar should be tiring here. Moving on to our favourite market, gold. We know it's had a good run. We've been bullish the whole way through this whole structure back here. Enjoyed this rally. I have to say, from a short-term perspective, just looking at the price action, gold could be a little bit tired here. However, given the underlying fundamental dynamic, which is possibly a major war in the Ukraine region, you wouldn't want to call a top, but you would say on price action alone, it's a little bit overbought on recent history, but if the history pages are turning over quickly, it doesn't mean anything, and we're actually at the bottom of the future range. That is a real risk for gold, but I'd keep a close eye on it here. I think it could fall back to this support, or maybe a little bit back towards the middle of the previous consolidation period, but that would be strong buying. The risk is it just continues to run higher. If you had massive gold positions, you might take profit on 5% of your portfolio just to see how it goes, just to test the waters a little bit. Overall, though, medium-term outlook very strong to the upside. Now, you might remember a few days ago, I was talking about Apple shares. And I was suggesting that, in the Big Short movie, everyone said, what has no one else done? What has no one else done? No one else has sold the AAAs. So Apple, at least one A anyway, a capital A, I was sort of saying a couple of days ago to a few days ago, this could be a stock to sell. It's been falling away since I spoke. That's how big my audience is. So, well done everyone for following my tip. I appreciate that. So it's been falling away. It's broken important support. It too has been trying to bounce, but it doesn't look that great. This is a very major event, because if the world's best stock, the one that everyone thought was safe, begins to decline, it will have a psychological impact of unraveling people's sort of confidence in other major stocks. The other stock I've been saying for quite some time, and I did a major video on it a few months ago, was look to sell Tesla. I'm still sticking with that, and Tesla's come off a lot over the last few months and is again threatening to break lower yet again. The Tesla correction could be very significant to the downside, and really I think it's one of the greatest companies in the world. I think Elon Musk should win a Nobel Prize for the environment, giving his integrated energy system from roof tiles through battery to the car and the home. But nevertheless, the stock is simply overvalued. He himself realized that. That's why he himself has been a seller. Thank you very much. Clifford Bennett. And I was just going to say, with all this bearishness I'm giving you, a little bit of a cheery slide here. Basically, yes, things are tough in the world. Things are tough in markets. This is where you get out of your comfort zone, but where the success happens. I'm not sure if you can see that there. And I was one of the first people in the world to be wearing red sneakers, so I did like this slide. Get out of your comfort zone. That's where success happens. Unfortunately, that's kind of the situation we all find ourselves in now, all around the world with regard to Ukraine. But remember, equity markets were already vulnerable. Gold was already going up. Ukraine's just another catalyst. But do try to make the most of the situation, even if it is challenging and difficult. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities. Have a great day.